We have a big week coming up, especially in light of the labor market reports that we got last week. I put out in my Discord that the pressure really goes on to the inflation reports to come in lower than expected in order to really see the market turn around. And you can tell that that pressure is there. We'll take a look at the charts today to see exactly what's going on in the pre-market hours and where we could potentially go given the movement that we're seeing. And I think it's really important to pay attention to those technicals in light of the economic news that we've seen and what is coming for us. Plus, don't forget that we have big bank earnings starting on Wednesday and then into Thursday. It's going to be a huge couple of days here between the inflation reports. Tuesday, PPI, Wednesday, CPI, big bank earnings also on Wednesday, giving us a forward look at what is expected of the economy. And then also on Thursday, we have more bank earnings from there. So I want to show you the economic calendar here so that you can see that. So you have it on your right in front of your eyeballs here. So on Tuesday, there's PPI that we get coming out 8:30 a.m. And then on Wednesday, here's the CPI numbers that we get. And I think coming in as expected is going to be good. I think we could get some levity from the markets if that is the case. But I do think that having numbers that come in below expectation is going to be significantly better from what we see there. And one of the big reasons for that, if we go over to the CME FedWatch tool and look at December of 25, so the end of this year, it was expected that we got about 50 basis points of cutting from the December meeting from the Fed, which was actually on December the 18th. And so when we look to see where that peak used to be, it used to be around 3.75 to 4.25. That peak has now moved up to anywhere from 125 basis point cut sometime during this year to none at all. So that peak has significantly shifted towards the upside, which means less easy money coming our way, which means more expensive borrowing. And well, the market tends not to like that so much. Well, what can really help that out? Well, there's two things that can help that out. One thing is looser labor market conditions, which we didn't get, and lower inflation, which so far we haven't seen. So being that we had that tighter labor market report coming out for us last week, and then this week having that inflation ahead of us, I think that's a lot of the reason why we're seeing the downward pressure that we are. And then I think that there's also something significant to mention about bond yields. The fact that bond yields continue to climb from where they're at right now, it puts in that whole servicing the U.S. debt trouble there for us, and inflation doesn't help that either. So there's a lot of negative catalysts that are out there right now that are causing some temporary downward, or actually I should say momentary, I don't know if it's temporary, downward pressure on the market. And I think that's a lot of the reason why we see the downward pressure that we do in the stock market. With that said, I think that we should get over to the charts. So I'm going to put up, there we go, trading view here, and we'll start looking through the charts that we have in front of us. So let's kick things off with SPY. I was talking in previous videos about this head and shoulders pattern, and then I said there's two potential necklines for this one, right around 581 and another one that's right around 586. And so for those, where do we find ourselves? Well, we actually closed down below this bottom one last week, and moving into this week, pre-market hours down to 575. So this is significant to see that take place. I'm going to move this trend line off for right now. It's only a minor one anyway. And what else do we see on here? Well, besides that head and shoulders pattern, we also are in a rising wedge pattern that we happen to be falling a little bit below. So will we keep on going in a bullish direction, or do we continue to fall in a bearish direction from where we're at right now? Well, the inflation reports, I think, are going to be the biggest giveaways that they have. So if we get higher than expected numbers there, that's going to be even more significant downward pressure on the markets. At least, in my opinion, it might not be the only thing that moves the markets, as they are complex. Gosh, I wish it were so simple, but if it were, then people with even more money than I have, and trust me, there's plenty of those people out there, institutions, you name it, they would definitely take advantage of it in those ways. But we can definitely take a look and we can know some things about the charts that are in front of us. So this rising wedge pattern, nothing to take too lightly. Same thing for the head and shoulders pattern, especially because we closed down below the neckline last week. And so that's where we find ourselves. Say hello to Benjamin. He keeps on ending up here in front of the camera. He's been relentless recently, almost as relentless as this downward pressure that we're seeing over the past couple weeks in the markets. So let's move on from there into the Qs to see what's going on with the Qs. And let's go out to, actually, here's something just to show you real quick. I was looking at the monthly charts on this one. Look at the candle formation that we're getting on a monthly basis for the Qs. You get evidence of a lot of selling pressure right up here at the top. And then going into January, and even though it's still a little bit early for January as we kind of roll into the middle of January, if you will, we're starting to see a little bit of a downward sell there as well. So we'll see if we kind of come off of some of that uncertainty. We're going to have to watch and see. There's also something else significant about momentum when you look at the RSI for the Qs and SPY, and that's some of this bearish divergence that you have where the momentum is slowing down, but yet these prices keep on rising. And so with that dropping momentum, rising prices, that's also could be a bearish signal for us. Now, mind you, a monthly chart, that could be something months or years before any sort of final drawdown happens in the market, but it is present with both SPY and QQQ. Here, let me take down some of the technicals on this so you can see that happening. And so I'll also drag up the RSI here so you can see the peak that we have back at the beginning of 2018 and the fact that we don't have a higher peak. We just keep on getting lower peaks. If we cross down below 70 on this most recent one that we have here, that can be one time where you start to see a drawdown in those prices. Let me really expand that for you so that you can see more exaggeratedly the fact that we do have the drop in the momentum, but the rise here. So we're still in bullish territory. That's a good thing. This is a monthly chart, so this can be months or years in the making, but we are down at 68 right now. We are still on top of this yellow moving average that you have, if you will, and watch for that sort of continued drop that we have, especially if we drop down below 63, because that would put down this previous low that we have on a momentum basis, and that tends to kind of go along with stocks when you see lower lows and lower highs, that we could have that sort of stuff. So just some things to be watchful for. I said IWM would take things rougher if we don't have that easy money coming for us, if there is higher inflation, if we don't have those Fed rate cuts coming our way. And that's what we're seeing right now, is that underperformance for with the IWM, we're tracking the Russell 2000 stocks and NASDAQ 100 through QQQ, S&P 500 through SPY. So far down below that 200 day. Now, mind you, this could be a significant bounce point. And that's the thing, is that inflation reports coming in lower than expected could be significant upward pressure for us, especially bank earnings talking about positive economic outlooks could also be significant upward pressure for us, especially for things that kind of talk back down the bond yields that we see that are out there right now, which have gotten pretty high at this point in time, especially those longer term bond yields that we're looking at, like the 10-year and the 20-year. So let's move on from there to Bitcoin, because Bitcoin, highly important here, because we're breaking down through this critical support that you see that came off the 2021 peaks, and then we see back here in 24 in November that we came down and we touched this line. Look at the breakout that we got as soon as we got above it. So that can speak to as much resistance as we got. Look what happened when we finally got a full candle above it. We ripped, and that's where we put in that all-time high of over $108,000. My goodness, $108,000 per BTC. And then look, when we draw down, we came here, we touched this on December the 30th, and then we checked it out again on January the 9th. And then yesterday, January the 13th. So used to looking at the stock charts. Crypto goes 24/7 here. Today, coming down below that. So this is not a confirmed break. That's something you need to be aware of. A confirmed break is getting that full candle close beneath, and especially if we see a retest of support as resistance, because before it was support and push down through here, get a full candle down below that could show us a resistance, especially if we retest and get rejected. That would be that resistance. And then we could be watching for anything from 85 to 78 to 71. And you can even see from this head and shoulders pattern, this 74,519 could be where we sell down to, according to the head and shoulders pattern that you see for Bitcoin. Now, once again, just like with the regular markets, if inflation shows to be cooler than expected, then that once again could be some of that upward pressure you would see. Now, XRP is one I've been tracking as well. And XRP, I put out yesterday that we were breaking up above resistance on this bull pennant. And so that is incredible. But I said, watch the retest, because if we retest and hold, that could be very good for bullishness. However, as of right now, mind you, this is not a full break back down through resistance. This could still show as support for us. And if that holds as support, that's a very bullish sign. If it breaks and falls back in here, then it's the job of the moving averages to serve as support for us. So the fact that Bitcoin is sort of selling down, and mind you that with its market cap and its influence is going to be a big weight on XRP as well, we definitely have to watch that. By the way, we're 2 days away from the SEC deadline for filing its appeal against Ripple. and that could affect XRP as it's part of Ripple. And so we want to watch for that, plus the inauguration day coming up on January the 20th for all of crypto, just getting through that smoothly, if you will, and then the following weeks to see if there's any sort of quick policies made or more announcements as per like a Bitcoin strategic reserve or more pro-crypto news following that inauguration day, moving Trump into the presidency. We're just going to have to watch and see what we get from that. And now, mind you, if there's any sort of political drama that might be in the background that maybe I'm not so aware of, because this isn't a political channel, it's a finance channel, that is also something in the political realm that if there is drama happening leading up to that inauguration day or expected drama, that could also be downward pressure on the markets because, well, there's a lot of contention that's out there, and that's that whole fear, uncertainty, and doubt thing that comes along with the markets. And the markets don't like uncertainty. And so that could also be part of that drag that we're seeing. So I don't know right now if we have something sustained in the pre-market hours, if it's going to hold out for us. I do think that we could see some red leading up to those inflation reports. The first on PPI tomorrow would be a little bit forward looking in terms of what we could expect for prices being passed on to consumers and CPI in subsequent months. But low numbers for PPI would be absolutely welcome to see this sell-off get stemmed off right now, stop the bleeding, and then see some positive, some upside from that. And then, like I said, bank earnings and then CPI on Wednesday. We absolutely would be watchful for that as well, getting some subdued numbers from CPI and some very positive news from the banks would be very, very helpful for turning things around from where we're at now. And if that doesn't happen, that CPI comes in higher than expected, or PPI comes in higher than expected, those are things that are going to be really rattlesome to the markets, in my opinion, especially if we do have a tightening labor market with that higher inflation. That is going to be something that just keeps the Fed unable to make any further cuts from where they're at. So I said it during the last meeting, they were stuck between a rock and a hard place, loosening labor market conditions and higher than expected inflation. So they couldn't raise rates, couldn't cut rates. Well, labor market, the reports coming out showing that there's actually a little bit of tightening happen, that it's not as loose as they expected, actually gives them some upside for raising rates. It actually kind of softens the unemployment side for them of that rock and a hard place thing. And then that hard place of, okay, well, what do we do about inflation? It's like, well, then we have some room to tighten some more, or we have some room not to cut as aggressively, even though it wasn't very aggressive compared to what we previously thought. Instead of getting another 100 basis points of cuts, only getting 50. Now it's looking potentially like none to 25, and the markets just hate it. And so that's about all there is to it. Guys, thank you very much for watching. If you want to hear more of what I have to say, see what I have to offer, the link for the Patreon is down in the description. Click that, sign up, and head on over to the Discord. Come on over and be part of that community. And if you want to learn to do technical analysis and get access to the bread recipe trading strategy through Stockmo Academy, that link is down in the description. Click that, sign up, use the code word DOCTOR, DOCTOR. When you do, and it's going to give a massive discount. Guys, I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.